Let's jump into our GameStop trade that we had for ER that was yesterday, June 9th, and why we set it up, why we structured it this way, what we were trying to do, why we went with what we did, and we'll just explain everything in general. So the basic structure of this trade, if you know butterflies, you know you're going to be selling a ratio of 1 to 2, 1, and then building off of that. So what we decided to do was buy the 280 put, sell 2 of the 260 puts, and then buy a 250 put on here. So what this does and this allows is controlling the speed aspect of an already highly volatile name, and this thing can move. So we had a bearish bias when it came into entering this, saying that okay, if anything this is going to stall out, but maybe it stalls out and goes down. That was one of the tricky parts of maybe do I want to pull this back up to that 300 level and do it, but I figured I could get a little bit more out of this by pulling it down, and I worked off the hourly and was really just trying to target the 20 EMA, 50 SMA on the hourly, just because it typically has found support here, maybe consolidated for a little bit and moved there. So that was the general technical side of what I was thinking, but now into the actual dynamics of the trade and why I structured it this way. By structuring it this way, by buying that 280, selling the 260, and buying that 250, I got basically a 1 delta entering that trade, and then after this morning hit I was stuck at about a 10 delta. So I got, moves very slow. So if you don't understand what delta means, let's just break it down. No other Greeks involved whatsoever. For every $1 it moves, it'll move 10, okay, 10 cents. So dollar per move or whatever. So what we have here is when the morning opened up and we were down and it was at that 280 level and it was finding a little consolidation, the spread of those contracts really widened out. It was sitting out about 10 wide, and it was about a, almost a 500% difference between the bid and ask, which is huge. So this is exactly what we wanted out of the trade. Right now it's trading at about 250. I would be sitting absolutely beautiful when it comes to this, making about 500 per contract on here, risking only about 400. So there's 400 to the downside if GameStop stalled out or went up. But if it made it past that 280 point, I can hit this pyramid max of about 1600. And then if it got under 150, I make $600 no matter what. And right now that's kind of where it's sitting at, where it's consolidating at, where you can get max. As this goes on, as tomorrow will come into play, you'll notice that that purple line on your screen will inflate back up into the blue box and kind of lift up past that 600 on there if it's sitting below 250 on that. So there's perks to waiting a little bit longer, especially if it gets into that range. I had a bit of paper hand syndrome here and kind of got rid of it just because I didn't want to deal with that bid and ask. It's too much, too wide of a spread. It is closed up together now. It's pretty close in spread now, about what is it right now, $2 off. Yeah, $2 spread on that, so it's not too bad. But that's the main thinking. I wanted to control speed, highly volatile name, get as low as delta as possible so I have time to react and it's not going to get away from me. I'm not going to lose that $400 right away, and then just trying to take advantage of the bias that I had off playing that hourly. So hopefully that explains why I did it. The main thing, speed.